the US Federal Reserve has taken the headline Fed's funds interest rate from 0.25% to 5.25% in the fastest sequence of increases on record, the American jobs market still seems to be running very hot. This may be of concern to policymakers, as meaty wage increases could potentially create a cycle of higher pay, higher prices, higher pay, and higher prices, and make it harder for the central bank to drag inflation back towards its 2% target, especially as the inflation readings for services and the core measure that excludes food and fuel are both looking pretty sticky. Now, this raises the importance of the usual early month run of jobs data from America, when vacancies, unemployment claims, job cuts, new posts created, and pay will all be under the microscope. First up comes the Job Openings and Labour Turnover Survey, or JOLTS, on Wednesday the 31st of May. The last reading was 9.6 million vacancies, still way above pre-pandemic levels, but a good way down from the 11.6 million peak of spring 2022. This suggests the US jobs market may at least be losing a little bit of feet. On Thursday the 1st of June, we'll then be treated to the Challenger Gray and Christmas Job Cut Survey, the ADP Payrolls Report, and the weekly initial unemployment claims data. For reference, last time around, the Challenger Gray and Christmas study for April showed just under 67,000 job cuts, near trebling year on year, but at least the lowest tally for 2023. The ADP report showed 296,000 jobs added, more than expected and the best number since March 2022. And weekly initial unemployment claims hit 242,000 in the 7 days to March 21st, the third highest reading of 2023. Confused? You should be. And this all shows what a difficult job the Fed and policymakers have as they juggle jobs on one hand, inflation on the other, all while trying to maintain financial stability and not make any more waves in the banking industry. After that run of numbers, central banks, policymakers, and investors will look to the non-farm payrolls data on Friday the 2nd of June. Last month, America added a higher than expected 253,000 jobs. The unemployment rate ticked down to 3.4%, and the average hourly wage grew to $33.36, a 4.4% increase on the previous year. The company news slate, probably thankfully, isn't quite so busy, at least in part to the month's third bank holiday Monday in the UK, which is also Memorial Day in America. Company updates or results reports which may be worthy of further study include the following, although do note that some of these dates could yet be subject to change, and it's a pretty short list. Greencoat and Hollywood Bowl on Tuesday the 30th of May, and Auto Trader, Pennon and Dr. Martens on Thursday the 1st of June. The company which may just cause the biggest fuss in the week ahead, however, is B&M European Value Retail. The FTSE 100 members due to release its full year results at the end of March on Wednesday the 31st of May. Now, as with the case with many retailers, and especially brick and mortar ones, shares in B&M European Value Retail have rallied hard since the autumn, and they've actually reached a 12-month high, buoyed by hopes from imminent peak in interest rates, lower oil prices, caps on fuel bills, and an overall improvement in UK consumer confidence, even if that was from low levels. The disappointing full-year results of May 22 and drop in underlying UK sales and a decrease in group-wide profit margin shown in November's interims all now feel just a little bit of a distant memory, especially as January's third quarter update was much more upbeat. New Chief Executive Alex Russo, who took the reins from Simon Arora back in September, unveiled headline sales growth of 12.3% year-on-year, with growth of more than 20% at Heron Foods and B&M France, and a 10% gain at B&M UK, where the like-for-like sales figure was at a 6.4% increase year-on-year. For the whole of fiscal 2023, analysts have penciled in total sales of £5 billion for the year just ended, a 6% increase on a stated basis, and they're looking for the same 6% advance to £5.3 billion for the year just begun. Mr. Russo also unveiled no change in earnings guidance, whereby adjusted EBITDA, earnings before interest, taxes, depreciation and amortization, the firm's preferred metric, was seen reaching between £550 and £600 million, a drop from the £619 million generated in the year to March 22. And he also flagged a special dividend of 20p a share. B&M European Value Retail offered an unchanged interim dividend of 5p a share, and analysts have actually popped in a small cut for the final payment to 10p from 12p to take the total ordinary distribution for the year just finished to 15p, down from 17p a share. We'll see if that's a little bit conservative given the special dividend. The final point of interest may be store openings. The company has a long-term plan to grow its estate in the UK to around 950 sites from 700-ish and grow its French footprint. The plan for the year to March 23 at the start of the fiscal year had been to add 40 UK sites, 15 for Heron Foods and 6 in France. I hope that you and your families are in good health and good spirits. Thank you for watching, and I look forward to seeing you next time.